All right. Today's SPY was up 0.35%, and we're still in this critical resistance zone between 451 and 453. And if we break through this resistance, that is significant on the weekly chart. It likely means we can push all the way back to the previous all-time high. And while I'm not saying we're going to do that, if we break through that resistance, that's what price action is going to be telling us. So without a doubt, this is very critical resistance here at this level. Now, if we get rejected from this resistance, even if we push to 453, there's a good chance on a rejection that we come down and fill the gap right around 443. So be aware of that gap, but don't assume it has to fill. Wait for the price action to get rejected and then manage your risk from the level that we were rejected from. It's a lot easier than trying to call a top just to wait for the price action to show a pivot. On the NASDAQ 100 triple Qs, we were up 0.93% today, and we closed outside the upper Bollinger Band for the third day in a row, and we have some resistance to pay attention to at 383 and 386. If we continue to push through that resistance, then we're likely going to 393, and above that, we're very close to the previous all-time highs, so just like SPY, these are very critical levels. Now, triple Qs have two gaps to fill to the downside, so if we start to get a pullback from this overextended condition, and we break down through this low, we could go fill the gap at 374 and just below 369. Now keep in mind, while these gaps will fill at some point in the future, there's nothing that says we can't go higher and then fill those gaps at a much later date. So if you're just assuming these gaps are going to get filled and you're using short dated options to play it, you could be very disappointed if we go this other route where we go higher and then fill those gaps later. So don't just assume we're going straight down to fill those gaps. Watch that critical resistance to the upside, and the critical support we need to hold above to maintain this bull trend is going to be right around 365. On the Dow Jones, we were up 0.2% today, and the Dow Jones only has one critical resistance left, and that is 346. And if we get the breakout above that resistance, it should be blue skies all the way back towards the previous all-time high. That makes this a very critical resistance because we can't assume it's going to break. We need the price action to prove it. On a rejection, we have gaps to fill below 343 and 339, and we have critical support right here at the 20 daily moving average at 341. On the Russell 2000 IWM ETF, we were up 1.07%, and I just did another update on the small caps on the weekly chart and showed why it's still bullish, and today's bullish candle completely engulfed Friday's red candle. So this is looking more bullish with the upside targets at 195, 198, and then we're in the 200s, and we do have a gap to fill down here at 190 and the critical support at the breakout at 188. So as long as we are above 188, this is still a bull trend, which means we're likely heading into the 200. On the ARKK ETF, we were up 2.29%. We still have that price target just above 50, and we are breaking out of the bear market resistance. However, on a breakout, usually we will come back and retest that breakout. So don't be surprised if the ARKK ETF pulls back down towards 46 and then goes into the mid 50s at a later date. On the VIX, we were up 1.28%, and the VIX is still down in the low 13s, and this is very low fear environment, and this is usually when people are going to start hedging. So from here, we could see another spike in fear, volatility, but we're not getting bearish unless the VIX starts closing out above 15, and then we'll likely see the VIX pushing towards 18 to 20. On Bitcoin, we're still stuck in the bull flag between the support at 29,500 and the resistance at 31,000, and we are trading below a negatively sloping 20 daily moving average. So if we lose the support at the bottom of the bull flag, we'll likely see a very quick trip back down to 28,000. If we get the bull breakout, then we're likely pushing towards the price target at 35,000. On Apple stock, we're up 1.73%, and we're pushing back up to the previous all-time high at 194. And if we break through that, then we're likely going to the price target at 197.5. We have a gap to fill to the downside at 191. So if we do see a rejection, it's possible we go down and fill that gap, and we're bullish as long as we're above 190. So jumping back over to the S&P 500, we are at very critical resistance. So if we break through that, that is instantly more bullish and means SPY is likely going to the previous all-time high. However, there's a great chance because we're at critical resistance, we get a rejection. So just wait for the price action to confirm it, because if we get a rejection, we're going to see the pivot in the price action, and we'll have a great risk level to manage our risk from as we attempt to trade down towards the gap fill. If you just blindly short a bull trend, you're just going to get short squeezed out when we break through resistance. So try not to trade against the trend until the price action allows for it. I have my own trade alert service called Bank Trade Alerts and the Stocks Channel Discord. So if you're interested in either service, you can find out how to join by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.